March 19th, 2026. Let's go over the trades I took today and look at the market. Look at how we are. We're really just staying on this path here. It's very clear. Don't have to draw lines. Just use your eyes and just look at what's going on. And then look at the volume and the momentum for more clarity. So the momentum to the downside is building on the NASDAQ. And we've got an increase in buyers today. So we had a lot of buying pressure. We had it was green day, but it was at the same time a consolidation day. Not much happened. You're going to see what I mean by that here in a second. I took a few trades and they were in the NASDAQ. We're going to go over them right now. And here's what I mean by not much happened today. And we just didn't really go anywhere. We had a consolidation, and finally we had a really interesting wedge breakout right here, and that took off like crazy. So anyway, let's get into it, and here's the first trade of the day. So first trade I took to the downside, a short. The 5-minute was pulling away from me. Here are the 5-minute twins. You have your 5-minute extended hours below, and you have your 5-minute regular hours on top. They can sometimes show different data sets, which is why it's nice to have both of them for the open of the market, for the beginning. So let's just look at the momentum right here. Let's start with the 2-hour. Look at the 2-hour. What is it doing? It's going down. What is the 30-minute momentum telling us? Well, it's going down as well. And then what's the 15-minute telling us right here at this point? It's going down, strong downward current, but there is some upward pressure happening. And then the 5-minute is clarifying that even further. We're in the red, but there's some upward pressure occurring. So why would I take a short? Why would I do that if there was some upward pressure forming? And the answer is, I took a discretionary trade today, and I don't do that at all very often. But today was that day. And I entered right here at this candle. I'm going to move this line aside so we can see the candle a little bit better. This candle was my entry. Why? Right below this yellow line. Because the momentum started tipping down, not going up anymore. I'm looking for a short position because all of these momentums are going down. So we're waiting for the momentum to align to the downside, which happens right here. Started to tick down right here. And this was a 2x3 volume arrival. 10 seconds before the candle finished, but then in the last 10 seconds of this candle, this particular volume wick right here changed from red to green. So that's important because that's not a true volume confluence at that point. All we're going off of is the momentum. That's all we're going off of at that point. So I entered here at the close of this candle, and I put my stop loss right here above this recent movement, the recent swing highs. And then the very next candle, it delivered. It got the win. So that's wonderful. Absolutely wonderful. Good trade right there. It was a good discretionary trade, which I normally don't do. Next trade on the day was right here. And I hopped in this trade with some discretion as well. So today was a unique day in that regard. So look at the 5-minute. 5-minute data is doing what? It's going up. So we're looking for longs. But we need the permission from the 15, and now we have it. 15 is in the green. 30-minute working up, hasn't crossed over yet, so we need some caution. 2-hour, as you know, we're going down. So we're looking for downward opportunities as the day unfolds. But you trade both directions when you can. So now look at this. I want you to look at this. This was an important, very important discretionary trade I took today. Here is a line I'm going to use to represent my entry point. Okay, this is my entry point. So normally, I enter at the close of the candle. Here was my entry, right here. Why? We had a volume confluence occurring, and we were on the right side of the momentum. But you'll notice that I made a mistake, because this candle right before, what do you see? This is also a volume confluence right here, and we're also on the right side of the momentum. So I really made a mistake today by not entering right here at the proper entry. This was the entry candle right here. You could even say this one was an entry candle, but we're not going to get into all that. And was I on a 2-minute chart or was I on a 1-minute chart? Because maybe I'm actually looking at this the wrong way. I was on a 2-minute chart, that's why. Okay, that makes a little bit more sense. So, 1-minute chart might have been better, you know? Either way, we're on a 2-minute chart when this happened, and what happens? We're looking at the momentum. We see the momentum building. That's what we need, right here. This previous candle, we see the momentum building. And then this very next candle, after this one finishes, I wanted to enter here. I wanted to enter right here at the close of that candle, but I didn't. And as soon as that one finished, the next one began, and it started to take off pretty quickly, and I saw a lot of volume flowing in. So what did I do? I entered like here at 54, if I remember correctly, which is slightly higher. So like right here, that's where I entered. So I entered early. Stop loss below the candle, and I targeted the actual edge of the candle, and I know that because the target was actually hit. So that was a good trade right there. It really was. But at the same time, it was risky because it was discretionary, and it would have been a loss if I would have stuck to my original rules and my standard rules of waiting to enter at the close of the candle. That would have been a loss in that case. It's important to know that. Important to say that out loud, to reflect on it. And it's also important to reflect on the fact that, yeah, at 10 a.m., even though I normally use the 2-minute chart at this point, because you get nasty wicks like this, you get nasty candles that just don't even, they're losing their fidelity. The 1-minute chart certainly would have worked. Certainly, because, like we just covered, these two would have been my entry points, and that would have given a very good win. So that's the lesson right there that I learned. Moving on to the next trade. Next trade was a loss. Very important loss. I entered this trade on a 5-minute chart, and we're going to look at the difference had I chosen a 2-minute chart. We're going to look at the difference right now. Here's the 5-minute chart. I entered right there. Why did that move? That's strange. I entered right here because we had a volume confluence right there. These arrows need to be taken away so this becomes more clear. So I see a volume confluence and I see a really large bar. And that's what my entry was right there. Simple as that. Why? This is already the 5-minute data, so I don't really need to show you this, but I'm just pulling it up. Okay, here's the 15. 15 is in the green. That's what we need. The 30-minute is in the green. That's what we need. So this was fine. Everything was fine about this. Everything was fine. I understand why I took the trade. I love the setup. We had a volume conflict. You know, I love the setup. Had this been a better entry, yeah, that would have been a better entry because look, the momentum is now taking up. It's that first one. Something I'm becoming awake. Something that I am becoming more awake to is maybe not putting a lot of faith in the volume confluence and maybe just trusting the alignment in general. Either way, this was my entry for a long because everything's going up, and that obviously hit my stop loss. That was a loss. But look at the 2-minute chart, okay? Had I used this 2-minute chart, you see how clean this is? Going down, 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 up. Up and volume confluence. So my entries would have been here, and this would have been a good win. So that was the lesson from that one. That was a loss right there. Finally, I took 2 more trades. This one right here. Why? Everything is going up. Up, 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 up. Everything's aligned. What do you see? You see a massive volume bar come out of nowhere. Look at this volume bar. That's a huge volume bar. The momentum has been going up for a while. Why didn't I enter here? Because the 5-minute hadn't been aligned yet. The 5-minute was going down. So we wanted to wait for the 5-minute to start flipping to go to the upside so that we have alignment. So the entry was here on a 2-minute candle. Stop loss slightly below. This hit every single target, and we captured the final target as well. Great win. I finally took a last trade of the day in the last 10 minutes, just because, honestly, I was looking for the adrenaline and because we had a wedge, right? So I saw this wedge. You can see the wedge, right? I saw this wedge. I saw a volume confluence occur on the right side of the momentum. And my only warning, which it was an obvious warning, It was totally obvious. The 5-minute data was not saying to take longs right now, is it? What is this telling you? This is telling you to look for short opportunities. So I was trading against 5-minute alignment. It's a big no-no, and I did it anyway, and it was a small trade just because I was having fun. Final 10 minutes of the day, didn't want to risk too much. Ended up being a loss, and that's fine. That's what I deserve. With all that being said, I'll see you in the next one.